Good morning and welcome to the AQUIS Exchange PLC Interim Results Investor Presentation. Throughout the recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab situated in the right corner of your screen. Just simply type in your questions and press send. The company may not be in a position to answer every question received in the meeting itself. However, the company can review all the questions submitted today and publish responses where it is appropriate to do so. Before we begin, I'd like to submit the following poll. I'd now like to hand you over to Alistair Haynes, CEO. Good morning to you, sir.
Good morning. Good morning, everybody, and a very warm welcome to you. I am Alistair Haynes, the founder and chief executive of AQUIS Exchange PLC, and I'm joined here today with our CFO, Richard Fisher.
Good morning, everyone.
I would like to begin the presentation with an overview of half one. I'm very pleased with the strategic progress that we've delivered across all divisions during this period, as we position ourselves to capitalise on the very significant market opportunities, I believe, at AQUIS. 2 weeks ago, we updated the market on our outlook for the full year. We'll cover many of the comments there later. But first, I want to take a look at the H1 highlights. Net revenue was up to £10 million. The profit before tax steady at £1.1 million, and cash increased to £14.5 million. If we look at AQUIS Technologies, there was very strong growth and increase in the quality of the contract pipeline. In fact, more than half of these potential customers are national exchanges or central banks, which demonstrates a real evolution of the client profile. AQUIS Markets, following the rule change that we made at the end of last year, we've seen market share up to 5.2%. With AQUIS Data, some of you will remember that we actually started charging members in Q2 this year. Revenues grew, and that will continue to grow in the second half of this year. And of course, with AQUIS Stock Exchange, I mean, we all know that this is probably the worst market in living memory on IPOs and primary markets. But despite these challenging conditions for the primary listing, the exchange has seen very pleasing growth in trading volumes as well as the fundraising for secondaries. I now want to start looking at the numbers, and I'll pass you over to Richard.
All right, thank you. Yes, so as Alistair said, we lead off the results with a 4% increase in net revenue for period on period. And if we then step into the four divisions, we would point to the strong growth that we've seen in data revenues, so up 17% to 2.2 million. And that's where we start to see the impact flowing through price rises announced in September last year. And also we start to see the benefit coming through for charging members for data. If we then look across the other three divisions, those are broadly flat period on period, which against, as Alistair described, a very challenging marketing backdrop, we believe is a very solid set of results. If we then step down to operating costs, those have increased from 8 million to 8.4 million period on period, and that represents the ongoing targeted investment we're making into primarily our core development technology. So that's how we can continue to invest for our future growth. If we then step down further through the P&L to the depreciation, amortization and interest line, you'll note that is improved from a 600 debit to a 500 debit. And that's where we're seeing the benefit flow through from increased interest income arising on the cash balances that we hold. And if you step down through there, as Alistair said, we come to a PBT of 1.1 million, which is flat on the prior period. That in turn gives rise to an EPS of 3p per share. At a basic level, 2.9 fully diluted. And then lastly, we would just, as Alistair noted, from the balance sheet, pull out that we have a 14.5 million cash balance at the period end. So we're now heading back to Alistair, and we'll start to begin the divisional deep dives.
Okay, thank you, Richard. I first want to look at AQUIS Technologies. We currently have 8 technology contracts, 2 of which we are yet to actually recognise revenue. And we've made really good progress on building out the product suite that is necessary for the future delivery of those two non-recognized contracts, which obviously include BDLR, the Banco de la República, the bond market for Colombia. The average length of contracts has increased to 3.9 years. Now, the good news on that is, I believe, as we start dealing with these new type clients, we will see that increase, and that gives more confidence. Clients are wanting to have longer period of time with these contracts, with these technology contracts. So I expect to see that increase from 3.9. The future contracted cash has moved to 11.8 million, which Richard will explain in a minute about how we are able to fund our strategic investment. But post-period end, the group was informed that a historical contract for a startup exchange would not be renewed. And that was for a reason that was absolutely not related to AQUIS, was not related to AQUIS Technologies. And whilst this is disappointing, we are, however, really pleased with the scale of the opportunity in this division, along with the quality of that pipeline.
Yes, and on that, it's probably worth noting exactly what that non-renewal represents. So just a chance to sort of clarify that for everyone. So it's worth saying that this was a contract that was signed 3.5 years ago, and the client has paid each and every month throughout that period and will continue to do so till the end of the contractual term in Q4 this year. Now, our understanding had been that the client would renew at that contract maturity date. And for those of you I've spoken with before, you'll remember that the accounting on these contracts is frustrating at best, but we are required by those accounting rules to recognise a significant element of the revenue up front. And it was that which we had in our forecast for Q4 this year. So once we were made aware of the client's intent to not renew, it was that which I removed from our forecast for this year, and thus went out to the market to adjust the market's expectations of where we would likely be. So in and of itself, it has no relevance directly to other organisations within our contractual pipeline, but we just wanted to clarify those reasons for that non-renewal. So if I now hand back to Alistair, we'll start to look at the current pipeline in more detail.
Well, look, this pipeline has accelerated and to become the strongest in division's history. In fact, the pipeline is more than double what it was this time last year. So if we actually look at this in much more detail, we have already signed one contract this year. We have 2 heads of terms that have actually been signed, and we have 10 contracts or potential customers in RFP process. That means they are advanced, and often in RFP that means you're down to the last 2, 3 or 4. So we haven't talked here about early stage, and we have obviously a number in the early stage phase. The important part is, out of those in the RFP and with those in the heads of terms, you look at those 12, 6 of them are national stock exchanges or central banks. That is a complete difference, and it shows the strength that having won a central bank with the BDLR, we are able now to compete at the highest level and are involved in the RFP process right the way around the world. And this is very, very exciting. Market awareness, because of that contract, has really changed the way that AQUIS is perceived. You have to remember that we have a product here that is best in class when it looks at proprietary matching. In fact, there are a number of investment banks who actually look at AQUIS as the benchmark solution of exchanges where they trade, and benchmark others against us and look at us as the leader in this field. We are the leader in cloud technology in the exchange space, and we are the only company in the world that can have which has the Equinox product, the 24/7 perpetual matching engine. We have more flexibility and scalability to build than any of the other legacy providers out there today. This is a significant opportunity to provide multi-year contracts two large exchange groups. So what is the strategic investment? Well, the strategic investment is going to allow us to capitalize on the opportunities across multiple asset classes. It is going to increase the conversion rates of our technology business, and it is going to shorten the implementation period for delivery. We're giving an investment, or we are going to have an investment of £6.2 million over the next 3 financial years. And I'd just like Richard to talk a little bit more detail about that.
Thank you, Alison. Yes, and it's very important to note that this investment we are making, we are going to make out of our free cash flow that we are generating ourselves. So there's no need for any further external investment. This is literally how will we deploy the excess cash that we are generating to generate future returns for our shareholders. And if we look at the nature of the spend, the primary focus on this is additional hires that we will make into both the development, QA, and infrastructure areas at the start. So that's how we actually build out the product set. And then later there'll be hires into the sales cycle to help build out that profile. The spend is broadly even across the 3 years, so circa 2 million a year for the next 3 years. But probably how I would help sort of contextualize that level of spend is if you take a single contract, let's say a small to medium contract of about £50,000 per month, and if that was running on a 5-year contractual basis, in that 5 years, that contract would be worth £3 million. What we have seen is that with these contracts, they will normally renew once, if not twice. So to sort of fund that 6 million, all you would need is one contract for 5 years, which would renew once. And it's that sort of opportunity that we're saying for this level of investment, we really can look to expand our future pipeline. And on that, I'll probably hand to Alistair now, who will look for how that investment opens up our target addressable market.
So I think, thank you, Richard. If one looks at what Richard said about, the one contract will finance this opportunity. We've looked at the pipeline, and you can see how really strong that is and why we believe also that that will continue to remain strong. We've looked at the quality of the product, of what we actually can deliver. Now let's look at the scale of this opportunity. Now you'll see on slide 10 that there is a pie chart. And if somebody came straight to us today and said, we want an equities trading platform, we could provide that without any difficulty whatsoever. And that is the 11% in the blue segment of this pie chart. Now, we have already started to work on the red part of that pie chart with some of the investment we made last year. But the 6.2 million is the amount of money we need in development, QA, product management, legal, compliance, etc., etc. So it covers everything in order to complete the additional requirements for us to be able to sell fixed income, core derivatives, fixed income derivatives, commodity derivatives, etc., index derivatives. Now, once we've done that, we move from being 11% of the total addressable market right the way up to nearly 80% of the total addressable market. And remember, that market is around about 400 exchanges around the world. So this is a really, really significant opportunity with scale for us at really a price that, 6.2, as Richard said, just one contract has to be won. And obviously, we expect to see significantly higher than that. Of course, what we've added in there is once we've done that, that doesn't prohibit us from actually expanding the product even further at a later date to include tier 2, which will have things like index calculation, interest rate derivatives, and then right the way into the green, the 10%, which today is all about things like carbon markets, FX spot markets, energy markets, and others. So if we move on to the next slide, the astute amongst you, and we'll start talking about markets, the astute amongst you will notice that normally we talk about markets first and then move on to technology. But I wanted to make quite certain that given the strategic investment that we were able to put AQUIS Technologies first. But let me absolutely assure you that the markets business remains core to AQUIS. We will continue to invest build and grow market share to above 10% by innovative products and by continuing the good work that's been done through the rule change. Market share has improved. It's gone to 5.2%, but it is the start of the process, not the end here. Overall market volumes have remained low, particularly in lit trading. That is the price formation piece of trading. And that lit trading has declined year on year for a number of years. And that is primarily because international investors have really not been investing into the UK and Europe. But I do believe that our business is cyclical and that we are now at the end of the declining cycle. And I've said for a long time that you will not attract international investors into Europe until we have stable governments. This year, we have seen elections across a huge part of Europe, including obviously in the UK, and fundamentally important, we also have the election on the 5th of November in the United States. I've always said that once we've cleared this election sort of mayhem and this inconsistency and lack of stability in geopolitical sort of issues, the markets have a chance and will grow, and we will enter the next stage of the cycle. I believe we are very, very close to that. So while we talk about low market volumes, we're talking here about AQUIS being able to grow market share at a time where I think market volumes will also increase. What is really important about the rule change is the diversification of liquidity provision. And we started to talk about this last time and why it's so important. Our business has relied on designated liquidity providers to provide the liquidity for other market participants. And whilst designated liquidity providers do play an incredibly important part in the ecosystem of any marketplace, it is the participants and their supply of liquidity which is also incredibly important. And we hadn't attracted as much of that as we liked. And you could see pre the rule change, only 18% of liquidity was actually supplied by investment banks. We have driven, whilst we've seen designated liquidity providers decline in percentage terms, we now have around 40% of our liquidity provided for by banks, investment banks and brokers. I expect that to increase to be above 50% over the coming year. And that gives us an incredibly stable platform to grow other products, not just in lit, but also in dark, periodics, and continue to be innovative. The target of 10% has not changed, and the AQUIS Markets business, although all the other exciting opportunities we have in the company, still remains very core to our business, to our company. If you just go on to the next slide, we talked a little bit then about products. We now have 5 products. We've included within the period conditional order types, but we will continue to bring new, innovative, cutting edge product to diversify the business and meet customer demand. So we do not stop at 5, and hopefully over the next few months, quarters, etc., you will hear more and more information on this. We've also increased our investment in Optimix. And remember, they have the obligation to print orders to us and trade through our marketplace. So that will also help us grow market share. And we now have taken a stake of 10.2% in that company. Trading members remain at 42, and revenues were on par with H1 23. And I think given the macro conditions that we're seeing today, I think that is a really good performance. I'm going to pass over to Richard now to talk about data and the really interesting consolidated tape.
Okay, thank you, Alistair. And yes, if we look at in our own current data revenues that we're earning through the data division, we're pleased to report a 17% growth period on period to 2.2 million. And And that's flowing through from two main parts. So there's the impact of the price increases that were announced in September last year. But also, we've seen for the first time, we've started to charge our members for data. And that came through the second half of the second quarter this year. So in and of itself, we have seen that flow through, and we'll continue to see the benefit of that flow through in the second half of this year. So really internally pleased with how that division is performing. But as Alistair said, I think perhaps is what more exciting is how we view the consolidated tape. And for those of you we've spoken with before, over the last 6 to 12 months, we're very clear that this has moved from being a case of if to when. But then the question has been about, okay, so what is that date? And the piece we are pleased to report is that ESMA continues to reiterate the same timetable. So back in May, they published the timeline we've included here, and they remain wedded to those times. And even better, we continue to see delivery against those dates. So I think we've always had this view that it should be seeing revenue come through in 27, and that remains the case. So I think we will see a lot of activity in this consolidated tape arena over the next 6 months. And I think we remain very excited about the opportunity. And this, as we've spoken about before, would be a material opportunity for further data revenue growth. So on that, I will now hand back. Apologies. I will now pick up the AQUIS Stock Exchange. And on this, as Alistair mentioned at the start, this has been an incredibly difficult market backdrop. But against that, we have still managed to have 2 IPOs. So both Time to Act and Teleam were launched in the period. But perhaps even more pleasing for me is if you step back and actually try to look under the bonnet of what has actually been happening in the division across this period. And I think it's there in some of the highlights that are set out. So in the period, we've seen a 44% increase in the value of trading, a 10% increase in number of trades. The fact that in that market, we have seen £87 million raised. I think that's a real testament to what we're seeing and how AQSE is being perceived in this market. But I'd also say there's a part of AQSE that people sometimes forget, and that's just how important that RIE license is to us as a group and the status that it bestows upon us. So we've referenced before that as we look at our technology contracts, the fact that we have that high status through the RIE license is a real valuable contributor to our marketing brand and a success or otherwise of those pitches. But on that, I will now hand over to Alistair to do some concluding remarks.
Well, look, thank you, Richard. The outlook, I truly believe that the future is bright. And there are 3 things that I actually want to get across here. The first is this opportunity that we have shown by the technology pipeline, the quality of that pipeline, and the investment we're making in it. That, to me, is a game changer for the business. The second is the consolidated tape. Richard talked about, what that actually means to data revenues in the future. But the question I think investors have always asked us are the 3 important questions: if, when, and how. If has gone. It isn't a doubt now that the consolidated tape is coming. When? Well, I think that ESMA chart as such shows that they have kept to the timelines, and that the timelines and the activity that's going on in the marketplace right now is showing that those timelines are firm, and that we have more and more confidence of a revenue from 2027. And that activity is answering the questions of how. We're getting far, far more clarity as to what this actually means. And the reason why we're trying, we're growing and our focus is on lit book, is that lit book market share is most likely to be the real recipient of revenues that come out of the consolidated tape. And that is the importance that we've made out of the rule change and the position that we're gaining now in the market as a result of that rule change. So I do remain very optimistic about the future. I'd like to finish with just saying that the current trading is in line with the board's expectation set out in August trading update. And I'm now open up to any questions that you may have.
Alistair, Richard, thank you very much for your presentation. Ladies and gentlemen, please do continue to submit your questions. You can do that just by using the Q&A tab, which is situated on the top right-hand corner of your screen. We have received questions throughout today's presentation. I'd like to start the Q&A session off with the first question here, which reads as follows. Please, can you describe the competitors to your technology sales division?
Yeah, absolutely. I mean, I think the usual suspects out there are the world leaders. So they are NASDAQ, which clearly is the leader in there. And I'm absolutely delighted to say that we have beaten them a number of times over the last 18 months. And I think that is a credit to our product, a credit to our sales team, and the way that we can sell this. And I think, probably a shock to them. On that list, you will also be, there's the London Stock Exchange with its Millennium product, and then you end up with a number of regional providers. The number of RFIs we've been through, and as I said before, there's now 10 people in the RFP stage. The RFP stage is normally, as I said, somewhere between 3-4 final competitors, and the usual names, the usual suspects. And the great news here is that because of the contract we won last year with the central bank, and because, as Richard said, we have this RIE status, which allows us to be able to participate at the highest level, means that we are now included in a huge number of these RFI and RFP processes. And that is why we want to make quite certain that we broaden the product suite so that we can actually increase the conversion rates, so that we can absolutely maximize on this unique opportunity that we have today.
Yes, and I'd probably also add that one of the credibility points we have here is obviously we use our own technology within the AQUIS Markets division itself. So the technology we are selling is in support of an MTF that is delivering 5% of the market share across Europe. I mean, that is a compelling technological proposition. And also, for example, even within AQSE, we have deployed the matching engine into the cloud using AQUIS technology. Again, another proof point that we're able to use our markets to distinguish ourselves from some of the more startup exchange technology providers who do not have that ability to demonstrate it.
That's great. Thank you very much. The technology's contract pipeline has grown significantly with high quality prospects. What factors do you attribute to this growth, and how confident are you in your ability to convert these pipeline opportunities into long-term profitable contracts?
Well, I think we may have covered some of that, but the answer is yes, I remain incredibly confident. The very fact that you can literally beat the world's leader in this space a number of times gives me a lot of confidence. The important thing here is to make quite certain that not only can we do it in the equity space, but we can do this across multi-asset classes. Because as you look and you can see this huge total addressable market of over 400, then you can just see what would happen. And as Richard said earlier on, you really only need to win one. And, my goodness, we are going to win many, many more than that.
Yes, and I think the strategic investment will by nature improve that conversion rate that exists within the pipeline. So the more we have developed out there, the more success we would have against that pipeline. And that in turn becomes a virtuous circle. You would then find it easier to attract further clients into that pipeline. So yeah, I hope those points sort of answer your question, but it's a very good question.
I think also just to go back on the 6 national exchanges or central banks now, you sort of got to look at the counterfactual. Why wouldn't you request AQUIS to be part of any RFP where we have the solution? Because today we're winning.
Thank you both. We've got another question here. To what degree do your products need to be tailored to each client's needs?
Well, I don't want to disclose too much here because, otherwise, but the theory is very simple here. Which is almost, and I think Richard and I have used this analogy in the past, which is that our product is customized, but actually it's almost like sort of bespoke kitchens, which is the units in your kitchen, 90% of them are actually just the standard units. The customization goes around the 5-10% that you need. And that is where I think we're very good. We understand the exchange business as being an exchange ourselves. We use our own technology. So we understand the customization piece very well, and we can communicate that well. But we also have probably the leading kitchen unit out there, because that is the benchmark that other investment banks are using. So the answer is yes, probably 5 to 10% of the project is customizable for somebody. That becomes smaller and smaller the more contracts you have, because obviously if you win other contracts in newer asset classes, then actually you've done some of that customization for one company. It's probably going to be less for the next. But we charge for that customization. So the price elasticity in this business is really, really good.
Yes, and probably one follow-up point is it's almost that core commonality across the main platform, the non-tailored piece, is what enables us to make this a very high margin business, because what we can do is almost have a core platform. So when we put an upgrade through, we will literally upgrade each client at the same time. So we don't have a bespoke need to maintain, for example, 8 different versions of this. This is one core operating platform with tailoring around the edge. So yeah, it really helps us to manage that cost spend.
Thank you. The next question asks if you can talk a bit more about the drivers behind the technology sales and why do trading environments need new tech?
Well, I think the truth is that the majority of national exchanges around the world today use technology that's 15 to 20 years old. In fact, technology that was created and sort of built prior to the iPhone even being invented. You imagine what your life would be like. I mean, it's extraordinary, the importance of a national exchange as part of the center of the capital markets or the equity capital markets in a country or a region using this type of technology. And cloud is changing the way that the world looks, and the technology developments are happening so quickly. But because it's become very hard for some of these people to change quickly. And that's why we think that when we have one of these contracts, when we win these contracts, they're never really 5 years. They might be 5-year contracts. They're going to be longer than that because the RFP process is long. And they're changing because they really have to update. It's not just about speed, which is what happened maybe 15, 20 years ago, where people needed to get to faster trading because of the increase in the high frequency trading community and the liquidity providers. Now it is about all the other things that go, all the sort of exciting things that go on and other products that are necessary to make it easy and simple for everybody to be able to connect to a system. And if you look at it, and I have said this so many times, we need to get the public into public markets. We need to create strong competition. And competition amongst exchanges is best done at the technology level.
Perfect. Thank you very much. The next question here, how much your member data fees?
Sorry, how much?
Are your member data fees?
I think what we have guided to is a total impact that this would provide. So we've indicated that by charging our members data, we think that our annual data revenue would increase by 0.6 million. So you will obviously have only seen 1 or 2 months impact flow through in H1 this year, and then you would see 6 months impact in the next year, and apologies, in the second half of this year, but you'll only see the full annual impact in 2025. So I hope that helps answer that sort of question.
Thank you for clarifying that, Richard. The next question, we see the stock remaining very illiquid, even in very volatile trading conditions. Can we expect to see the stock moving from the quote-based market to continuous trading on LSE?
It's a great question. And I tell you one that frustrates me enormously because, no founder or CEO wants to see their stock being illiquid. And I think it is around the number of investors we have. We don't have as much retail investment as I would like within the company at all. Retail investment, as I keep on saying, is such a critical part in capital markets. But we still have to take the advice because of that of what our advisors say. And what we don't want to do, and I'm really, really open to the way that we actually have our stock traded, because I want to see more liquidity. But I think we have to do the right analysis and look at not just what system is used, but how the makeup of our shareholders is, and how we can actually get more people interested in trading AQUIS. Because obviously, I believe it's an incredible company, but we just What we don't want to do is move to a system where you could see higher volatility, because I don't think that actually helps the investors, and particularly the institutional investors who, on very, very little trading, will suddenly see huge market cap changes. I think we already get some of that, and I don't like it. But I think, we do need to get the evidence. Now, we're working on that. I think we've told one or two investors we're absolutely looking at trying to solve this problem. We want to find more liquidity in AQUIS. And we're not alone. It is sadly, very sadly, a problem in the market as a whole. We're not the only company that is not as liquid as it should be. And that means we have to have a fundamental change in the way that secondary markets operate in growth companies like AQUIS.
That's great. Thank you, Alistair. Turning to the next question. We appreciate the visibility you provided on the investment in technology. Considering the current cash position, the expected investment, and the expected OFCF, it looks like the company will have approximately 10 to 15 million pounds of extra cash available. The question then goes on to say, may we expect to see these funds be returned to shareholders, ideally via a share buyback, to be implemented through a partial public tender offer?
Well, look, we are always reviewing the cash, obviously the cash position. And you'll have noticed that in the last AGM, we had the ability to, which we didn't have before, to look at things like share buybacks. I'm not saying at all that we're going to go ahead and do that, but I think we have to leave all avenues open here. Of course, as we succeed, and I think the point that Richard made, and I made the point about how much cash we're generating or in the future out of the current contracts. If you see and sort of extrapolate what we'll get from the current pipeline and future pipeline and what we can do, this company will be very, very cash generative. And then we really do have to look at what do we do with that cash and how do we get the best return for shareholders from that cash. I don't know, Richard, if you want to add anything to...
No, I think that's a good answer. But also, I'd probably add that there's what the cash has enabled us to do, even over the last year, has been to build the investment, for example, in Optimix. So that enabled us to accelerate out our product set to look at block trading and hence further increase the speed of our market share growth. So we will be looking for opportunities to deploy this cash to accelerate our own growth, both through sort of organic and inorganic means. So I sort of hope that helps frame a range of answers for the potential uses of that cash.
Yeah, thank you very much. The next question, the cloud hyperscalers are looking to enter this market. Are they a serious threat?
Well, I think the cloud hyperscalers, I am a believer that in the future, everything will go onto the cloud. And I think we've proven that by actually being the first recognized investment exchange in the world to operate in the cloud. The hyperscalers here are an important part, but I see them as something that we would use and we work alongside. You've got to remember that to develop and to get to where we are, we worked incredibly closely with Amazon Web Services, not just the company, actually with the developers, to go and solve the issues like multicast in the cloud. There are still issues to solve in the cloud. And it is not as fast as being on-prem and having a data center. So I think actually they do play an incredibly important part in the ecosystem of trading in the future. But I don't see them as a direct threat to us at all. I see them as a partner.
Thanks very much. We've got one final question, unless anything else comes in. It reads as follows. AQUIS Stock Exchange, institutional investors increasingly avoiding market cap companies less than £75 million. How do you procure that they're deep-pocketed investors interested in growth microcaps using AQUIS?
Well, I think that's because, I have a passion and a belief, and I think I'm right here, that when you look at something like the Chancellor and her issues today, the issues are not so much about the listings of large sort of unicorns, etc. It is about how you grow the economy. And the growth of the economy can only happen if we actually finance growth companies successfully. And the issue that we've had in the past is this country is brilliant at startup capital. We have more entrepreneurs almost than any country in the world. We can get capital through great tax schemes like SEIS and EIS. But where we are so poor is that these companies, as they succeed, fail to scale up because they cannot raise the money. And the public market should be the perfect place to do that. That doesn't necessarily mean that you're going to have everybody and every investor and every pension fund investing in this, but you must have some, and we must get the public in. You must get people to have patient capital, both privately and institution, into growth companies. I think AQUIS Stock Exchange is perfectly placed to capitalize on that change that we're going to see over the next few years.
Perfect, Alistair, Richard. Thank you very much for answering all those questions from investors. Of course, the company can review all the questions submitted today. We'll publish those responses on the Investor Meet Company platform. But just before redirecting investors to provide you with their feedback, which is particularly important to you both, Alistair, could I just ask you for a few closing comments?
Well, look, firstly, thank you all for coming to listen to us today. I think you can get from Richard and I that we remain very, very positive about the future. We think that the economic cycle and the capital market cycle is going to change. And I think we are really, really well positioned to take advantage of that and to build our business and do something special in the 3 areas that I talked about earlier. So thank you all very much indeed.
Thank you very much, everyone.
Alistair, Richard, we appreciate your time and thank you for updating investors today. Could I please ask investors not to close the session, as you'll now be automatically redirected to provide your feedback, and all the management team can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of AQUIS Exchange PLC, we'd like to thank you for attending today's presentation, and good morning to you all.